Okay, so, you hear all this buzz about crypto investing, and there's a reason for that, right? I mean, the potential upside, it can be really
Oh,
exciting.
yeah, absolutely.
But, I think for every story of someone hitting it big you
Right.
hear about, there are probably, like, way more people who have just gotten completely scammed.
Unfortunately, yeah.
And you're probably listening to this because you see that opportunity, but you're also, like, smart enough to realize
Mhm.
you need to be careful.
You got to be careful. Yeah, you have to be
Yeah.
really discerning in the crypto space.
Right.
Because as you said, the potential is huge, but
Right.
the downside is that there's a lot of people who are trying to take advantage of that
Yeah,
excitement.
exactly. So that's why we're doing this deep dive today.
That's what we're
We
doing.
really want to give you the knowledge you need to be able to spot those most dangerous crypto scams
Absolutely.
so you can stay safe and protect your investments.
Yeah, think of it as we're going to give you the tools to navigate this landscape and kind of avoid the pitfalls
Yeah.
because the crypto space is sort of like the Wild West in a way. There's so much happening, so much innovation, but there's also a lot of risk.
Yeah, exactly. And we're going to get pretty specific today. We're going to be talking about everything from these crypto platforms that are really just like dressed up Ponzi schemes
Right.
to these fake ICOs,
Hmm.
to pump and dump schemes, phishing attacks,
Huh.
fake crypto wallets, rug pulls, and even these fake crypto exchanges.
Yeah, we're going to cover it all. We're going to hit all the major points.
Yeah, let's jump right in. Let's start with a scam that's, I guess you could say, kind of stood the test of time, the Ponzi scheme.
Yeah, it's interesting, isn't it, how this age-old sort of deception has, adapted to the digital world.
Right.
And in the crypto context, basically a Ponzi scheme is when, an investor is promised these incredibly high returns with, practically no risk. And the important thing to understand here is that those returns, they're not coming from any actual profit-generating activity.
Right.
They're just, early investors are paid off with the money from new people joining the scheme.
Right.
So it's kind of like a financial house of cards,
Yeah.
right? It keeps going as long as more people are coming in,
Hmm.
but eventually, it has to collapse.
Right. Yeah. It's like a digital version of robbing Peter to pay Paul.
Yeah,
But
exactly.
eventually you run out of Pauls to pay.
Right, right. You run out of new investors and the whole thing falls apart.
Exactly. So if someone is pitching you on a crypto opportunity, like what are the warning signs that should make you think, wait a minute, this might be a Ponzi scheme?
Well, well, I think first off, be wary of anything that just sounds too good to be true.
Right.
If someone's promising like, 20%, 50% monthly returns
Yeah.
with no downside, you should be like, okay, what's really going on here?
Yeah.
Because even in the volatile crypto market, legitimate investments, they carry risk.
Right.
So that's a huge red flag. Another thing is the pressure to recruit new members.
Mm-hmm.
Legitimate projects, sometimes they have referral programs, that's fine.
Yeah.
But if it feels like the whole emphasis
Right.
is on getting you to sign up other people,
Right.
then that's a problem.
Yeah. If they're way more interested in your network than in the technology or the investment itself, that's a big problem.
Yeah, that's not a good sign.
Yeah.
You want them to be focused on the product, on the technology, on the long-term vision, not just recruiting more people.
Right. Exactly. So are there any other warning signs we should be looking out for?
Yeah, so another big one is lack of transparency.
Okay.
If they're really vague about how they're generating these amazing returns,
Right.
like if they can't explain their business model, their trading strategies, where the profits are actually coming from,
Yeah.
be very cautious. Legitimate projects
Right.
should be open. They should be willing to share information about how they operate.
Okay, so ridiculously high, like guaranteed returns, the pressure to sign up new people, and then just like a lack of clarity about how they're actually making money.
Yeah.
So how do we actually like protect ourselves from these digital traps?
Well, I think, first of all, just be very, very wary of anything that's guaranteeing returns
Right.
or aggressively pushing you
Mm.
to recruit others.
Mm-hmm.
Remember the fundamental principle of investing. There are no guarantees.
Right.
Right. And if it sounds good to be true, it probably is. And then the second thing is do your research.
Yeah.
Don't just take their word for it. Look into the background of the team.
Mhm.
Are they real people? Do they have relevant experience?
Yeah.
Try to understand the business model.
Mhm.
Does it make sense?
Right.
And look at reviews and discussions on, reputable crypto forums.
Hmm.
What are other people saying? And if there are consistent warnings, if you see red flags being raised,
Right.
take those seriously.
Right. Okay. Solid advice. Um, so now let's move on to something that's kind of more specific to the crypto world.
Yeah.
Fake initial coin offerings, or ICOs.
Yes, ICOs.
So I guess for anyone who might be newer to crypto, an ICO is a way for these new projects to raise funds, right?
That's right, yeah.
By selling these digital tokens.
Yeah, you can kind of think of it as like an IPO for a company.
Okay.
But instead of selling shares of stock, they're selling these digital tokens
Got it.
that represent, potentially some utility within their future platform or whatever they're building.
Right, right. So how do scammers exploit this whole fundraising method?
Well, they basically create fake ICOs, right? They promise investors, early access to this groundbreaking technology or a token that's guaranteed to go, 10x, 100x in value.
Right.
But in reality, there's no real project, no viable technology, and
Yeah.
often the creators will just disappear with the money.
Right. So it's like a beautifully wrapped, empty box. Right. Like there's nothing actually inside.
Yeah, it's all hype.
Right.
It's all sizzle, no steak, as they say.
Okay. So how can you tell if an ICO is legitimate or if it's just like a scam waiting to happen?
Well, one of the most important things to look for is the white paper.
Okay.
So a legitimate ICO should have a detailed white paper
Right.
that outlines the goals of the project, its technical roadmap, the problem it's trying to solve, how the technology works.
Yeah.
So if there's no white paper, or if the white paper is really poorly written, it's vague, it lacks details, maybe it's even plagiarized from other projects,
Yeah.
that's a huge red flag.
Okay.
Another thing to look at is whether there's any actual product development happening.
Mm-hmm.
So, many fake ICOs, they'll sell tokens based purely on an abstract idea.
Okay.
There's no tangible product, no working prototype,
All right. Right. It's all potential with nothing concrete to actually back it up.
Exactly. So you want to see evidence that they're actually building something,
Right.
that they're, making progress towards their goals.
Yeah. Are there any other kind of clues that might tell you something's fishy?
Yeah, you also want to be wary of ICOs that make really hyped up promises about profits.
Right.
Scammers will often guarantee massive returns
Right.
in a really short time frame.
Yeah.
And, legitimate projects, they tend to focus on the long-term vision, the utility of their technology,
Right.
not just making a quick buck.
Okay, so we need to look at that white paper, look for evidence of a working product,
Mm-hmm.
and then be really skeptical of any outlandish profit guarantees.
Absolutely.
Yeah.
If it sounds too good to be true, it probably is.
Mm.
And, in the crypto space, that's even more true than in traditional markets.
Right, exactly. So what can we do to avoid these fake ICOs?
Well, again, do your research.
Okay.
Don't just rely on the information from the ICO itself.
Right.
Look for independent reviews, analysis, discussions within the crypto community. Investigate the team. Right.
Mhm.
Are they transparent? Can you find information about their backgrounds, their experience?
Right.
A team that's hiding their identities or, lacks relevant experience, that's a concern.
Yeah.
And then, look for evidence of third-party audits
Okay.
of their code, their tokenomics.
Yeah.
Legitimate ICOs often have these audits done to give investors more confidence
Mm-hmm.
in the project's security and transparency.
Right. So, do your homework.
Yeah, due diligence is crucial.
Yeah. Okay, let's move on to something that can, I guess, create a whirlwind of excitement
Right.
and then leave a lot of people with some serious losses, pump and dump schemes.
Yeah, those are unfortunately pretty common in the crypto world.
Yeah.
Yeah.
So how do those work? How do those play out?
So basically, it's all about artificially inflating the price of a cryptocurrency. Usually it's, a low-value coin.
Okay.
And then suddenly selling it off, right, for a profit, leaving everyone who bought in late holding the bag.
Right. So the people who organize this make all the money and everyone else is left with, nothing.
Yeah, essentially, yeah.
Okay, so how does that actually work in practice?
So typically, a group of organizers, they'll choose a target coin,
Mm-hmm.
and then they'll use social media, Twitter, Reddit, Telegram,
Yeah.
to just generate a lot of hype, encourage people to buy.
Okay.
The buying pressure drives the price up. That's the pump.
Right.
And then once the price reaches a certain level,
Yeah.
the organizers, they dump their coins.
Okay.
That causes the price to crash, and everyone who bought in at the high price
Yeah.
is left with a big loss.
Right. So it's this classic manipulation tactic,
Like
playing
so-
on people's like fear of missing out.
Oh, yeah. FOMO is a huge driver in pump and dump schemes.
Yeah.
People see the price going up, and they think they're going to miss out on this incredible opportunity.
Right, right. So how do we know that we're looking at a pump and dump scheme like in action?
Well, the biggest giveaway is usually a sudden massive price surge in a cryptocurrency that you might not have even heard of before.
Yeah.
And often there's no like fundamental news
Right.
or development to justify it.
Yeah.
So if you see a coin's price, jumping hundreds of percent, thousands of percent in a very short time,
Yeah.
that's a huge red flag.
Right. Okay, so what else should we be looking out for?
Well, this price spike is usually accompanied by a lot of hype on social media,
Mm-hmm.
a ton of positive messages, often really misleading,
Right.
all trying to create that FOMO, get more people to buy in.
Right. And sometimes you'll even see like celebrities or influencers getting involved.
Oh,
right?
yeah, that's another tactic.
Like, how does that fit into the whole scheme?
So scammers will sometimes pay celebrities or influencers
Okay.
to promote a coin,
Mm-hmm.
hoping that their followers will, jump in and buy,
Right.
and that will fuel the pump even more.
Right. Right. So you really have to be careful about, believing everything you see, especially from like, celebrities on social media.
Yeah.
Yeah, you can't blindly trust celebrity endorsements, especially in the crypto space.
Right. So we've got this massive, really rapid price increase, a ton of hype on social media, and maybe even a celebrity mention.
Right.
So how do we avoid getting caught in these pump and dump traps?
I think the best way is just to, resist that urge to make impulsive decisions
Okay.
based solely on social media buzz or FOMO.
Right.
Focus on investing in cryptocurrencies that have, a solid foundation, a clear use case, a history of development.
Right.
Be very cautious of coins you've never heard of
Yeah.
that suddenly become, the subject of intense hype online.
Right.
And just be aware of extreme price volatility.
Okay.
If a coin's price is going up for no apparent reason,
Yeah.
it's usually best to just stay away.
Okay. Good advice. Let's talk about a threat that's a little more direct.
Okay.
Phishing attacks. So how do cybercriminals actually try to steal your crypto through phishing?
So phishing attacks in crypto, they're really designed to trick you into revealing sensitive information,
Right.
like your login details for an exchange,
Okay.
or even worse, the private keys to your crypto wallets.
Right.
So scammers will impersonate legitimate entities,
Okay.
like exchanges, wallet providers, other trusted services,
Yeah.
and they'll send out fake emails, text messages, even direct messages on social media
Right.
that look very real.
Yeah.
And the goal is to get you to click on a malicious link
Okay.
or give them your personal information.
Oh, so they're really trying to like build this convincing fake
Exactly.
to get you to just like hand over the keys to your crypto kingdom.
Yeah, that's a good way to put it.
So what should make you question whether an email or a message you get is actually real?
Well, look for any unsolicited emails or messages asking for personal information, especially, sensitive stuff like passwords or private keys.
Right.
Legitimate services, they generally don't ask for that kind of information over email. Also, pay really close attention to the sender's email address.
Okay.
Often there'll be subtle misspellings or variations that might look real at first glance.
Yeah.
But if you look closely, you'll see something's off.
Right. Right. What about these fake websites?
Yeah, so often phishing emails
Yeah.
will link to fake websites
Okay.
designed to look exactly like the real thing.
Right.
So the goal is to get you to log in
Mhm.
or enter your private key on this fake site.
Yeah.
And then that information is sent straight to the scammers.
Okay. So if you see any kind of link in an email, it's always best to just like go to that website directly yourself.
Yeah, always double check the URL in your browser's address bar
Right.
before you enter any information.
Yeah. Okay. So you really have to be constantly like on guard
You do.
for these kinds of things.
Yeah, vigilance is key in the crypto world.
So what are some of the best ways to protect ourselves from these phishing attacks?
Well, I think number one, be extremely cautious about any unsolicited emails or messages,
Okay.
especially those asking for personal details or urging you to click links.
Right.
Don't click links or download attachments from unknown sources.
Mm-hmm.
And if you need to access an exchange or wallet, type the website address directly in your browser.
Right.
Don't click a link from an email.
Okay.
Second, get in the habit of really verifying the sender's email address
Yeah.
and the website URL.
Right.
Look for any inconsistencies.
Right.
Even a small typo can be a giveaway.
Right. Right. And then we've talked about this before in the show, but like 2FA is so important.
Oh, absolutely. Two-factor authentication
Yeah.
is essential for any crypto account.
Yeah.
It provides that extra layer of security.
Right.
So even if someone gets your password, they still need that second code from your phone or authenticator app.
Right. Okay, so let's talk about another scam that can lead to like a very direct loss of your crypto, like fake crypto wallets.
Yeah, these can be really dangerous.
Yeah. So how do those work?
So basically, fake crypto wallets, they're designed to look like real wallets,
Mm-hmm.
right? But their purpose is to steal your private keys.
Okay.
So if you enter your private key into a fake wallet, you're basically giving the scammers full control of your funds.
Right. Right. So how do we spot these fake wallets before it's too late?
Well, first, check the wallet's reputation.
Okay.
A trustworthy wallet should have a lot of reviews
Right.
from users across different platforms.
Okay.
So be wary if a wallet has very few reviews or if the reviews are mostly negative,
Mm-hmm.
especially if they mention security concerns.
Yeah.
Another huge red flag is if a wallet asks you for your private key.
Okay.
Legitimate wallets, they're designed so that your private key is stored securely on your device.
Right.
It never leaves your device.
Yeah.
They should never ask you to enter it anywhere.
Okay, good to know. Anything else?
Yeah. Also pay attention to any unusual behavior within the app. Slow loading times, frequent errors, things like that.
Yeah.
These could be signs of a, poorly developed or even a malicious wallet.
So we're looking for a lack of reputation, any request for that private key,
Mm-hmm.
and then software that just seems like buggy or unreliable.
Yeah, basically.
So how do we make sure we're actually using a real crypto wallet?
Well, the most important thing is to only download wallets from official sources,
Okay.
like the Apple App Store, the Google Play Store,
Yeah.
or directly from the website of a reputable provider.
Right.
Stick to well-known providers like Ledger, Trezor for hardware wallets,
Mm-hmm.
or MetaMask for software wallets.
Okay.
Those are established, widely used,
Yeah.
and they have a good track record.
Right. And I guess it goes without saying, but like don't click on any random links to download a wallet.
Exactly.
Yeah.
Avoid anything that seems suspicious or that you haven't thoroughly vetted.
Right. Okay, so now let's talk about a scam that's become really common in the DeFi space. Rug pulls.
Yeah, rug pulls are a big problem.
Yeah. So what is a rug pull?
So it's basically when the developers of a crypto project, often in DeFi, they suddenly drain all the liquidity
Okay.
for the project's trading pools.
And just to clarify for anyone listening, these liquidity pools, they're what allow users to easily trade tokens on decentralized exchanges.
That's right, yeah.
Okay, so go on.
So when developers do a rug pull, they remove all this liquidity, the price of the token crashes,
Yeah.
and investors are left with worthless tokens.
Right, right. And the developers make off with all the money.
Exactly.
So what are some signs that we might be looking at a project that's about to rug pull?
Well, one of the biggest red flags is an anonymous development team.
Okay.
If the people behind the project aren't known
Yeah.
or their identities can't be verified,
Mm-hmm.
that's a huge risk factor.
Right.
Legitimate projects should have transparent teams
Right.
with publicly available profiles and a verifiable history. Another warning sign is the promise of really high unsustainable returns,
Okay.
especially in DeFi staking or farming protocols.
Mm.
If the APYs seem too good to be true,
Yeah.
they probably are.
Right.
And then finally, look for evidence of independent security audits
Okay.
of the project's smart contract code.
Yeah.
Reputable DeFi projects will have their code audited by independent firms.
Right. Right. So anonymity of the team, crazy high returns, and a lack of security audits.
Those are the big ones, yeah.
Okay. So how do we avoid getting caught in a rug pull?
Well, I think just be very cautious,
Okay.
especially with new, unproven DeFi projects.
Mm-hmm.
Only invest in projects where the team is transparent
Right.
and their identities and experience can be verified.
Okay.
Look for evidence of independent audits
Mm-hmm.
and be really, really wary of, new tokens that are promising crazy returns with no risk.
Right, right. So, it goes back to that idea that if something seems too good to be true,
Yeah,
it probably is.
probably is, especially in
Yeah.
DeFi.
Yeah, exactly. So our last topic today is fake crypto exchanges.
Okay.
So how do these work? Like, how do these platforms try to steal your crypto?
So fake exchanges, they're designed to look just like real exchanges.
Mm-hmm.
They might even offer really attractive incentives like low fees,
Okay.
high leverage bonuses
Mm-hmm.
for depositing funds.
Right.
But the goal is to get you to deposit your crypto
Yeah.
and then make it impossible to withdraw.
Right. So they basically created this convincing storefront,
Exactly.
but then, like, once you're in,
They lock the doors.
they lock the doors and they take off with your money.
Yeah, it's a classic bait and switch tactic.
Okay. So how do we spot a fake exchange before we deposit anything?
Well, like we've been saying, reputation is key.
Okay.
A legitimate exchange will have lots of user reviews,
Right.
feedback from reputable sources.
Okay.
So, if an exchange is new and has no online presence or reviews,
Yeah.
or if the reviews are really negative, mentioning problems with the withdrawals, that's a major warning sign.
Okay.
Be very suspicious of exchanges that are promising, like super high returns
Yeah.
just for depositing funds.
Right.
Legitimate exchanges, they make money through trading fees,
Right.
not by giving away free money.
Exactly. And then I guess just in general, like, what does their website look like?
Yeah, pay attention to the design and functionality of the website.
Okay.
Fake exchanges often have poorly designed websites,
Yeah.
grammatical errors, broken links, inconsistent information.
So it just, like, seems kind of janky.
Yeah, if it looked unprofessional
Yeah.
or has a lot of technical issues, that's a red flag.
Yeah. Okay. So we're looking for a lack of a good reputation, those promises that seem too good to be true.
Right.
And then, yeah, a website that just seems like amateur or glitchy.
Yeah, basically.
So how do we actually make sure we're trading on a legitimate exchange?
Well, the best practice is to stick to the well-established exchanges.
Okay.
The ones that have a proven track record and a good reputation. Yeah. So, names like Binance, Coinbase, Kraken, Gemini.
Right.
These platforms have been operating for years.
Yeah.
They have a lot of users. They're subject to regulatory scrutiny.
Mm-hmm.
So they're generally considered safe and reliable.
Right, right. And like we talked about with those fake websites, like always double check the URL.
Oh, yeah, absolutely. Make sure you're on the correct website,
Yeah.
not a fake look-alike domain.
Right.
And also, avoid exchanges that lack transparency
Okay.
about their operations, their team, their security protocols.
Right. So it sounds like the main takeaway here is, like, you really have to do your research.
Yeah, due diligence is so important.
Yeah.
You can't just jump into something without really understanding what you're getting into.
Exactly. So this has been a really, I think, important deep dive
Yes.
into this world of crypto scams.
A lot of stuff to be aware of out there.
Yeah. I mean, it's clear that, like, while there's a lot of opportunity in crypto,
There is.
there's also a lot of risk.
Yeah. It's a high risk, high reward environment.
Yeah. And I think, it's good to be excited about the potential,
Absolutely.
but you really need to be careful and knowledgeable.
You do. You have to balance that enthusiasm with a healthy dose of skepticism
Yeah.
and, a willingness to do your homework.
So I think, like, the big message we want to leave people with is, like, if something sounds too good to be true,
Yeah.
it probably is.
It probably is. And that's especially true in the crypto space.
Yeah, exactly. Protecting your investments requires a really cautious and informed approach.
It does. You have to be proactive about your own security.
Yeah. So, as we're wrapping up here, I guess, like, the question to think about is, like, what specific steps will you take
Right.
to make your crypto journey as safe as possible?
That's a good question for everyone to ask themselves.
Yeah. And I think, beyond these common scams we talked about, it's worth thinking about, like, what other threats
Yeah.
could be out there.
What's coming next, right?
Right. Right, like, as this technology keeps evolving.
Yeah, because the scammers are always innovating, too.
Yeah, exactly. So stay vigilant, do your research, and, we wish you the best on your Staked journey.
Absolutely. Be smart, be safe, and good luck out there.
Thanks for taking this deep dive with us.